Well, Standard & Poor's has announced that it's cutting its long-term credit ratings on Refco Incorporated, and more cuts may be forthcoming. It's been a brutal week for the futures house. What impact will the unraveling of some of Refco's securities have on the market? Joining me now to talk more about that, two gentlemen who are somewhat intimately familiar with what's going on. Senior writer Matthew Goldstein, who has been covering Refco for TheStreet.com, and David Patch, editor of Stockgate Today and an investor advocate. He has personally filed a number of complaints with the SEC in regard to what he believes are incidents of naked short selling facilitated by large firms, including institutions like Refco. Gentlemen, thanks for being with us. And Matthew, let me start with you. Bring us up to date on what you know about Refco right now, not just its unregulated subsidiary, but the parent company, which is a regulated entity as well.
Well, the Refco Securities, as we know, which is regulated, is unwinding itself. It's not nearly as big, obviously, as Refco LLC, which is the futures operation, which I talked to a clearing customer earlier today who said that they just got an email saying that they're claiming that they're still solvent and that the accounts are segregated from the rest of Refco. So at least they're trying to put out that business is as usual. Refco did recently get a bit of good news. There are three main bankers, Bank of America, Deutsche Bank, and Credit Suisse First Boston, were meeting this morning what to decide about an $800 million bank loan. And I was told they decided to take no immediate action on declaring them in default, which would have set off a whole precipitous run on the bonds, more so than have happened. The banks are going to meet again next week.
Well, the bonds are at 27 cents on the dollar right now, right?
Well, I guess they could go to zero, presumably. But,
yeah.
But I mean, in a sense, they're not going to call and start changing all the covenants on the loans yet. I mean, there probably will be some changes on that, but it does give Refco a bit of breathing room, at least over the weekend into next week. Presumably, I think, to probably help Goldman find a buyer for the futures arm.
So you would say that is the more likely outcome than maybe full-scale liquidation of the entire firm?
That's what I'm hearing, and that's what I think. I mean, at least that's what they're hoping. I mean, the question is, what are they going to get for it? Obviously, Thomas H. Lee Partners doesn't want to take a total bath on this investment.
And he's lost, what, $750 million so far, or thereabouts?
Yeah, so I think they're probably giving him a bit more time to see if they can find a buyer. They're cutting off everything else and just leaving the futures operation there.
All right, now, Dave Patch, let me get your position on all of this. We have not spoken before, but you and I have spoken on air and through emails over the last several months, even up to 18 months now, because you're concerned that the big firms like Refco have helped facilitate an illegal practice in the financial markets known as naked short selling, much to the detriment of small companies that have been trying to get a start. Do you think Refco is part of that process, and do you think that what we've seen with respect to the improprieties taking place here are more the tip of the iceberg than they are the central problem?
Well, the way I look at it, back between 2001 and 2003, Refco was directly involved in a naked short selling scandal associated with Sedona Corporation. The DOJ has arrest warrants out for two of the primary characters in that from Rhino Advisors, and they bribed two brokers to manipulate the stock of Sedona. And under audio recordings, they have those brokers working at Refco Securities. So the SEC has been looking at Refco Securities since 2001, and nobody can understand why, if the SEC has audio recordings and the DOJ has audio recordings of Refco participating in naked short selling for an offshore hedge fund in the manipulation of Sedona, why they don't know and why they aren't concerned about this particular bad debt.
So you are concerned then that there's something more to this than just the transfer of losses from the likes of the company's former CEO to a hedge fund, a little-known hedge fund, that there's something else larger going on here, even though that remains unproved and, to a certain extent, uncharged.
Yeah, the way that we've looked at it and analyzed it, what kind of bad debt can you have since 1998 that you can't write off? And, if Refco was going through this IPO and they've been going through all this process, you would think that they would have been able to write off this debt after all these years.
Yeah, let me go to Matthew on that, because, Matthew, it does seem that, at least from what we have heard, that this pile of debt that has been shuffled back and forth between Refco and Liberty Corners has been accumulated over a period of time, and some people have made money off the transfer of that debt back and forth. Can you explain how this scheme worked and who benefited exactly?
Well, obviously there's a lot that's not known, and it's very confusing. I mean, clearly at one end, this Liberty Corner Strategies, which is part of a bigger outfit in New Jersey called Liberty Corner Cash Management, which claims to have $15 billion in assets under management, they benefited by doing this arbitrage on this. Now, they claim they didn't know what was going on, but one can say it's somewhat questionable. They had to know they were dealing between two different REFCO accounts because the loan to them went from REFCO Capital to REFCO Group, which was the entity owned by Phil Bennett. You know, these obligations go back to '98. REFCO hasn't said so much about it. I'm led to believe some of it could be trading losses incurred by REFCO, in part by being sort of the counterparty to some of the futures and derivatives transactions they're on, or also just sort of as their own hedging process could be part of what this was, and they never wanted to fully declare this and sort of have to write it off as a bad, you know, something that they were going to have to write down against their books.
All right, we're going to take a break on that note. When we come back, we'll return with more on the REFCO scandal, and we will bring in former CFTC General Counsel Dennis Dutterer. Street Signs is coming right back. You saw the most recent budget statistics for fiscal year 2005, one of the smallest on record recently, but of course will again be growing thanks to the spending on Hurricane Katrina and the war in Iraq. We'll come back and talk about that a little bit later in the program. Right now, though, we'll take a break and come back and talk more about REFCO. Speaking of deficits, right after this. All right, there are shares of REFCO which remain halted. They would close down 297 at 788. New York Stock Exchange still waiting for more information. And we'll return now to our discussion of the unraveling of portions of REFCO and what the demise of certain portions of that brokerage house will mean for the markets. Joining me now is Dennis Dutterer. He is former General Counsel of the Commodity Futures Trading Commission, and still with us is Dave Patch, editor of Stockgate Today and an investor advocate. And Dennis, if I come to you with respect to how regulators have to deal with a situation like this. You were General Counsel at one juncture at the Commodity Futures Trading Commission. You had a very high-ranking position at the Chicago Board of Trade. If you were actively working on this situation right now, what would you be doing in order to maintain, one, you know, fair and orderly markets in commodities, and two, deal with the problems that exist at REFCO?
Well, I think there's two things to remember, and REFCO is really two pieces of business. One is the futures and options part of the business, and the other, of course, is what's been referred to as the securities. And when you look at the futures and options side of the business, every indication is that it is running well right now without problems. The CME, the New York Board of Trade, the New York Merc have all indicated that REFCO is meeting its obligations. They're watching it very closely. They're getting, I'm sure, daily, almost real-time reports as to the position. So that part of it is very, very sound, and that's what one would want to watch and make sure that those institutions are keeping a good eye on it. And I know those institutions. I know they are. So that part of the business, I think, is very, very sound.
Now, all this comes just a few days before the Chicago Board of Trade comes public. The Chicago Mercantile Exchange already public. Chicago, you know, the Chicago markets at times have a reputation for a certain cowboy mentality, a certain amount of gunslinging, and a certain amount of occasional inappropriate behavior. Do you think that REFCO's situation will tarnish some of the firms in Chicago because of the events that take place there from time to time?
No, not at all. If you look at the Chicago Mercantile Exchange, the Board of Trade, the Clearing Corp, the other Chicago markets, you'll find that they are the ones that have been the most diligent in watching how these participants participate in the markets. Remember, the Chicago markets are a pay, collect, daily mark-to-market markets. So they are really on top of situations. So I'm very confident that they have a good hand on the markets, and I don't think it will tarnish them at all. They are heavily regulated markets.
All right, now, David, let me come to you. When it comes to heavy regulation, you have complained directly to the Securities and Exchange Commission, to the Depository Trust Corporation, Clearing Corporation, and others that the markets aren't regulated enough because big firms and others have conspired from time to time to hurt the small investor. What's your biggest complaint when you see an event like this taking place?
My biggest complaint is that the SEC's been negotiating a settlement with REFCO for going on 3 or 4 years that we can tell, and that the SEC at the same time lets this company go public when it's the executives in these particular corporate areas that REFCO was accused of using for stock manipulation. The SEC never should have let this company go public in the first place, and they should have addressed the fraud that was associated with this company several years ago.
Now, David, you have leveled some pretty wide-ranging charges about the financial system in America itself with respect to abuses in the naked short-selling arena, and there have been those in the regulatory community who have described you as, you know, a little bit cranky, a little bit off the mark with your allegations about how widespread some of this behavior is. What would you say to that?
Prove it. All I ask you to do is settle all the trades, and I look at the regulation SHO threshold security list, and you have companies that are on it for 200 consecutive days. We've received from the Securities and Exchange Commission under subpoena evidence that the SEC had gathered on their own that had 250-day trade that failed by some of our top institutions. And they sold the shares at $11, and they purchased it back in a buy-in 250 trade days later at 50 cents. The company went under. And there's evidence all over the place of these allegations being true. The SEC is just not enforcing it. We've asked Congress to step in and investigate the SEC's role in this, and Congress isn't stepping in.
Mm-hmm. All right, let me get Dennis's take on this. I mean, Dennis, you've seen some of this stuff, mostly on the commodity side, but with respect to what David is claiming about certain firms, do you find any of the allegations credible or too far out there?
Well, I'd use this opportunity to emphasize again that REFCO is largely two types of businesses. Mm-hmm. David has been talking about the security side, the SEC, activities like that. My questions were related to the comments related to, and the questions related to the futures side. And there are two distinct different sides. And on the futures side, I think we find that it's daily pay collect. Those monies come in and they're accounted for at all times. I think it's a marked difference, and I think the Chicago markets have an excellent handle on it, and everyone has indicated that REFCO continues to meet all its obligations, Chicago and the NYMEX New York Board of Trade Markets. Big difference.
Now, David, what do you say to that difference? It does seem important.
I agree. It is the security side that seems to have these problems. It is the security side that the SEC has been looking at and the Department of Justice has been looking at. But it is also Bennett and Maggio that they were looking at, and You're talking about
Santo, Maggio, Phil Bennett, who
yes.
were the principals in the firm. Yeah,
exactly. And the SEC, it was REVCO that put out a press release saying that they were negotiating a $5 million settlement, and Mr. Maggio was going to get a 1-year suspension from supervising the corporation because of his participation in stock manipulation. And how do you have people that you're negotiating stock manipulation settlements for go out and take a company public? I don't understand it. And I think that there's enough evidence. I look at regulation SHO and the grandfather clause, and where have you ever heard of a grandfather clause in the securities market? We have plenty of regulations that say that you have to settle trades promptly for the protection of the industry. I'd like to know where this bad debt comes from. I believe it personally is coming from unsettled trades, and that's why they couldn't write it off.
All right.
And if it truly is, $430 million worth of unsettled trades today, mark to market, what was it back in 1998 when they actually sold the trades?
All right, guys, I've got to leave it there. We'll come back to this soon. Dennis Stutterer, thanks for being with us. Dave Patch. Our apologies to Matt Goldstein, whose connection at the American Stock Exchange, or the New York Stock Exchange American Stock Exchange was cut off from us, so we'll get him back soon as well.